Hey everyone, and welcome. Today we are going to completely transform how you see one of the most overlooked indicators on your entire screen. Yep, we're talking about volume. And trust me, by the end of this, you won't just see some random bars at the bottom of your chart, you're going to see the flow of the game itself. So let's dive right in.
So here's the game plan. First, we'll talk about that indicator everyone ignores. Then, we're going to reframe how you think about trading entirely. It's not charting, it's a game. After that, we'll get into how volume really works, learn how to read the other players, and wrap it all up by showing you how this gives you a brand new tactical advantage.
All right, let's kick it off with Section 1, the indicator everyone ignores. You know exactly what I'm talking about, right? That little bar chart at the bottom that just kind of sits there, taking up space.
I mean, you see them on every chart for every single asset, every day you trade. But let's be real for a second. What are these bars actually telling you? If you're drawing a blank, don't worry. You are in exactly the right place because that is all about to change.
Now for Section 2. And listen, this is the most important mental shift you can make. We've got to stop thinking about trading as just drawing lines on a chart and start seeing it for what it truly is, a game. It's about shifting your entire focus from the lines on the screen to the players making those lines happen.
So to understand this game, we got to look at something called game theory. All it is really is the study of how people make choices when everyone's results are tangled up together. And in a market, every single decision to buy or sell or enter or exit, it impacts everybody else. This isn't just some abstract idea, it's the fundamental physics of the market.
And this right here is a critical distinction you have to make. You see, most of life, we hope, is made up of positive-sum games. Think about a good business partnership. New value is created, the pie gets bigger, and everyone can win. But trading? Oh no. Trading is a zero-sum game. It is a game of wealth transfer. The total amount of money in the pot doesn't grow. It just moves from one player's account to another.
And this is the cold, hard truth of a zero-sum game. For you to make a profit, another trader somewhere out there has to take a loss. So your goal, when you really boil it down, is to capitalize on the predictable mistakes of other people. That's the game.
So if we're going to play this game and win, we need to be able to read the board. And our best tool for that is volume. But first, here in Section 3, we need to bust some of the biggest myths out there about how it actually works.
Okay, so what is volume? It's actually super simple. Volume is just the total number of shares or coins that were traded using market orders in a specific time frame. That's it. But notice the key words there, market orders. What about all those resting limit orders sitting in the order book? Nope, they are not counted. Volume only tracks the aggressive, I want in now type of action.
Now, for the number one misconception I see absolutely everywhere. We see green bars and red bars, so that's got to mean buying pressure and selling pressure, right? A big green bar means tons of buying and a big red bar means tons of selling?
No, absolutely not. The colors are, believe it or not, just for looks. They don't mean anything by themselves. A volume bar is simply colored to match whatever the price candle above it is doing. If you have a green price candle, you get a green volume bar. Red candle, red volume bar. The key takeaway here is to start thinking of volume as a neutral counting tool. It's just counting transactions, not picking a side.
Okay, let's level up and tackle a slightly trickier myth. It seems logical, right? If the price shoots up, it must be because more people were hitting the market buy button than the market sell button. And if it drops, the opposite must be true, right?
Well, usually, yeah, that's the case. But not always. Remember, the market is a constant battle between those aggressive market orders and the passive limit orders. So if there's a gigantic wall of limit sell orders sitting at a certain price, it can just soak up all the market buys without the price budging. The price might even start to drift down as all those aggressive buyers just can't break through that wall.
So this brings us to the really fun part, Section 4, reading the other players. Now that we know what volume actually is and what it isn't, we can start using it to see the intensity, the conviction, and the behavior of the other players in this big zero-sum game.
Now, to profit from other people, it helps to know who you're playing against. The market really has three main types of players. You've got the exchanges, who are like the casino. They just want lots of volume to generate fees. Then you have delta-neutral traders, who are like super fast robots looking for tiny price differences to exploit. And then there's us. We're in the third group, Delta 1, or directional traders. We're the ones betting that the price is going to go up or down.
So, as a Delta 1 trader, what's our actual objective in this game? It's simple. to front-run the order flow. We need other traders to come in right after us and push the price in our favor. You have to burn this into your brain. The market does not move by itself. It only moves when other traders are forced to act, by either entering or exiting a position.
And that brings us to the absolute core strategy. This is your volume cheat sheet. When you see volume consistently picking up, getting bigger and bigger, that's a huge signal that more players are jumping into the game. There's growing interest, growing intensity. This is the rocket fuel for momentum trades, like breakouts. But on the flip side, what if you see volume drying up? If it's decreasing or just flat, that signals that players are losing interest. The energy is dying down. This massively increases the odds of a move stalling out or reversing, which is perfect for mean reversion trades.
Okay, let's bring it home with our final section, your new tactical advantage. We've defined the game, we understand our main tool, and we have a core strategy. Now let's put it all together and see how this gives you a real, tangible edge in the market.
This new way of thinking gives you two primary paths to victory. First, you can win by entering early. You get in slightly ahead of the big crowd that you expect is about to pile in and push the price in your direction. Second, you can win by counter-trading. This is where you profit from all the traders who are trapped on the wrong side of the market and are about to be forced to bail on their positions.
And this right here might be the most powerful concept of all. Those traders who are trapped on the wrong side, their losing positions, are literally the fuel for your winning trade. Because when they get squeezed and are forced to close their positions, whether by a stop loss or liquidation, their frantic, compulsory market orders are what push the price further and further in your direction.
So let's recap this whole mental model one last time. Number 1, trading is a zero-sum game of wealth transfer. Number 2, your goal is to profit from the predictable mistakes of other players. Number 3, volume is your best tool for counting player intensity. And number 4, the structure of that volume gives you a huge probabilistic edge. Increasing volume favors momentum, and decreasing volume favors reversals.
So you've done it. You've moved beyond just looking at lines on a chart and can now see the game being played underneath. You've got a powerful new lens to see the market through. So I'll just leave you with this one question. Now that you can finally read the flow of the game, what's your next move? Thanks for joining me.